Hello everyone, welcome back to FX 20 Pips. Today is the 15th of June 2023. It's a Thursday. Time is now 1:49 p.m. and GMT plus 8 my time. We are currently looking at GBPUSD on the daily time frame, and this is a busy week with all the data coming into the forex arena. Now, on the Tuesday we have the US CPI. Yesterday, Wednesday, we had the US FOMC, US interest rates, and today we have the Euro interest rate announcement also. Now, with the US CPI and the interest rate announcement yesterday, you can see that GBPUSD is still on the healthy bullish direction. Okay, and on the daily time frame, you can see that the price has tested and poked through the monthly high, okay, of these figures. It has not closed above yet, and this is, to me, this is quite a good looking week, okay, because it ended in a bullish candle and there was an attempt to test it out. All right, get the seller in. Okay, that means a lot of sellers would have the stop loose here, isn't it? So hopefully the price, I believe it might come down a bit more before pushing up again. Okay, because with the US interest rate announcement yesterday, there is a more tightening towards the end of the year, okay, before it starts to reduce the interest rate. Okay, so on the long term it is still bullish, right? However, price or buyers doesn't want to buy high now. It's quite expensive, so I believe there will be a lot of buyers waiting to enter at a lower price. Okay, so hopefully the price comes down before shooting up again. Now let's go to the economic calendar yesterday, and hopefully you understand what is going on. Just hang on. Right. So the interest rate yesterday was a consensus of 5.25, which is there is no increase of rates. Now, however, in March of this year, their projection for current year for plus 1 year and plus 2 years, okay, in March was 5.1, 4.3, and 3.1, right? And on yesterday, rather in the yesterday FOMC, okay, they have revised upwards for the current interest rate projection. That's mean up to end of December. Okay, the terminal interest rate, instead of 5.1, they are projecting for it to go to 5.6. Now, something to note of is this is a projection. Okay, it's not something that means that they must go to this level. No. Okay, as you can see, in March the terminal rate was 5.1. However, now in June we are already surpassing this level. We are already at 5.25. Okay, so all these are simply a projection, give you an idea. Now, so going back to what I'm saying, yesterday FOMC, at the end, they are projecting that at the end of this year in December, interest rate is to go up to 5.6. So we still have a gap of 0.35 from the current 5.25. Now, meaning to say, the increments in July or September okay, will be lesser, because if they were to stick to this projection, and if the ongoing data is much worse, so they might not even go up to 5.6%. All right, but then we're just looking at this range. All right, now could it go higher than 5.6? Yes, as per previous history, they had a terminal 5.1, but they have gone to 5.25. So what I'm trying to say is, this is simply a projection to give you an idea, but it's not something that they will hold on to it and say that they will do it or they will not breach it. Okay, now on a longer outlook in the next year, which is then 2024, they are looking at the terminal rate of the terminal rates of interest to goes to 4.6, okay, which is a drop of 1%. And then in 2025, the projection was to go down to 3.4%. Okay, so in the long term, they are projecting interest rate to go down, meaning that in the long term, the US interest rate is going to drop. Okay, how fast it drops? Again, this is just a projection. Could it go down to 4%? Could this go down to 3%? Yeah. All right. I mean, based on statistically things that they are doing, they have to come up with some figures. All right. So don't hold them to this figure. All right. Now, what Powell said mainly is that the housing data, if I didn't read it wrongly, because that was 2 a.m. my time, I was quite a bit sleepy. If I didn't hear it wrongly, is looking at the housing data like rental and all these things, which is the main cause of the inflation. All right, don't quote me. Go and watch the live, the recorded live Powell speak on a FOMC press conference. All right, and then you have all the details from there. Okay, so in summary, this is what I was going to show you. There was no increase of the interest rate, and in the long-term future, rates is going to go down. Right, so moving on, what do we have for today? We have the Euro interest rate announcement, which is here. Okay, so they are expecting a 0.25 increase to 3.5. Yep. And then next day, I believe, yes, there is also a Japan interest rate decision. Okay, unbelievable, still at negative 0.1%. Right, so it goes to show, if you look at my chart here, if Euro is to increase the interest rate logically, Euro is going to go up. Yeah, Euro is going to go up, meaning my GBP have to go down, meaning that this has to go down, which is good and healthy, because that's why I say I want it to come down before we go up. So there's opportunity to buy cheaper, all right, rather than buy at a higher price. Now, with the USD JPY, it is at a significant high level. Okay, let me just go to the chart. The last Bank of Japan intervened was around 145. Okay, and today the BOJ has given a warning, in a sense a hint, that the usual remarks of forex currency is too high or something to the effect, and it's not desirable, and Bank of Japan will take necessary actions to put it to the correct value. What is the correct value? We don't know. Okay, something to the effect of, all right, basically they're hinting that they want to take intervention. All right, so this is an early warning at this level, and the previous, like I said, the previous intervention was still at this level. So we shall see whether the markets take heed of the warning, which previously no, and that's why they intervene. Okay, so be curious to see whether they will wait for price to exit here again before they intervene, or even before price reach this level for them to intervene. Okay, my point is, if Japan intervene to force USD JPY to go down, that means JPY is to go up, USD is to go down. Okay, so when USD goes down, that means my GBPUSD will go up, isn't it? So that's why today, tomorrow, and until next week, all the news will be also affecting GBPUSD. So that's interesting, all right? And this is how all the currency, not all, some of these currency that are highlighted, they are interrelated to each other. Now let's move on. Let's go back to GBPUSD. Let's go back to our 8 hours for a start. Now, as per usual, I am always curious to find why the price turned around here. Okay, so let's draw some fib. Should I draw the fib? Yep. Let's draw the fib from here. No, I see it in the day, which is much clearer. Yeah, there we go. So on the daily time frame, I can see that here is the low, right? So let me just draw this thing for you. We have the low, high, low, high, low, high, and I'm looking for another low to buy up, right? So I'm going to do a fib from here, low, to here. All right. So as you can see from this daily time frame, price bounce off near here and attempts to close above here with a potential of second level here. Right. This is 1.26614. Look at this candle. Okay, did it close above? Now let's check it out. Look at the level here. What is the value here? Okay, when it's closed. Okay, just concentrate your eyes here and see what's the level as I put the cursor here. All right, so this candle, it closed at 1.26615. So basically it closed just one. I mean, is what this, because this is 1 pip, this is what, half a pip. Okay, it closed just above this value, right? And then it starts to come down. Okay, significant here to me is close above here, went up above here. All right, this is profit taking. That's fine. Okay, so even if you buy here, all right, you buy here hoping that it goes up here, now you are like, oh no, it's coming down. Right, so then the question will be, why are you buying? Why are you chasing the market? This is really a bad entry, isn't it? All right, the best way is to see how far the market can go up. All right, it's there. Let's wait for it to come back and buy. That means if you put the fib to this leg, now we know that this is the leg of this cycle, and I'm looking for it to come back here to go up, or here to go up, or here to go up, or even this to go up, as I said in my previous many videos. And I always repeat, because things that are important, you just got to keep repeating, so that it becomes natural to you, that without thinking about it, first thing is to get a fib and see what are the level you want to buy at. Right, so if this is a strong bullish trend, it might not even come back here. Okay, it might just go up to 38.3 or 38.8 and push it up. So let's look at the other levels. Right, so if the trend is a strong bullish trend, okay, this could be the lowest level you can go to, possibly. All right, so these are things that you have to keep in mind of some of the potential level for it to bounce. Okay, hope you know where I'm coming from. So let's go back to the 8 hours and let's go and do our routine activities, which is the 8 hours box. Here we go. This was the previous one. Right, now because of the news here and there, that's why I didn't bother to move this thing. Now that the news has subsided, everything is sort of coming down. So now is the best place to readjust the box. Okay, best time to readjust the box. So I'm going to put within this candle. There we go. Nice, isn't it? So now we are bounced by this candle. Price is doing what is doing best here, right? And you can see that no prices close above it. The other thing to take note of it is an inside bar for this one, right? So we have a range box, we have a inside bar, something for you to take note of. That's why I have this any pullback here. All right, let me just find out where it is. I haven't. There we go. Here's my any pullback bar. Right, I use it to capture the inside bar. You can simply draw two lines. Okay, it's really up to you, but I just like to have a different view that I'm dealing with an inside bar here. All right. That is the 8 hours. Let's go down to the lower time frame. Let's go to 1 hour. Okay, 1 hour. Okay, in a 1 hour, you can see we have a lower time frame of inside bar, isn't it? Right? Can you change this and put it here? Yeah, by all means, go for it. Right? It's just that in the lower time frame, you react much earlier rather than on the 8 hour time frame. So whether you want to put it on a 1 hour or 8 hour inside bar is up to you on your ability to sit in front of the chart. If you're so busy that you have to work 8 hours a day, then obviously, all right, you can't cope with all the hourly changes. So you have to deal with the 8 hours inside bar. Now, if you are sitting right now here in front of the computer, then by all means, focus on this 1 hour inside bar. Okay, if price break above, wait for the second candle, and then you got to think about a higher time frame whether it will break above the 8 hours inside bar. Okay, many things for you to concern about. Again, I see a key wave, isn't it? Right, so let's just remove this inside bar. Right, okay, what I want to do is just complete my daily activity first. All right, so previous day, let's go to, where's the high? The high is this one, and then the low is this one, isn't it? Let me see, what is this? Let me hide this box. Okay, the low seems to be, is it here? 1.26011. What is this? 1.26007. Okay, so it's 007 here. That's the lowest, right? Now let's find the 50% halfway mark, which is here. Previous day midpoint, right? So at a glance, we have the start of the week, and price is currently near the midpoint of the previous day. Pretty simple. This is the 1 month high of the candle, right? So we know where we are in regards to the candle. Right, now let's draw a simple trend line. Oh no, let's draw the buy and sell zone. I haven't done the buy and sell zone for some time. So again, very straightforward. There's a wick here, there's a body here. Take note of this wick and this wick here. There's a wick here, there's a body here, there's also another wick. So just by a quick glance and from experience, what I'm going to do is I am going to draw the box right here, okay, in order to get an early entry if I'm buying. Just here, small breakout buy and sell. I'm not really interested in sell, but I just want to draw it. Same thing, I'll put it here to here. And then I put it as a breakout sell. Okay, I'm really not interested in this one. So, but as a daily routine, I have to do both. Okay, the idea I put it here is because if price wants to go down, I want to make sure that it goes below this wick here. Alright, that is why the level is here, meaning that I want to see the candle to close below and a continuous candle to keep going, right? Likewise here, I did not put the buy here because I want to buy low, sell high, and it's logically that, you know, I put a breakout buy here, right? And so that once price is here, touches here, I might go for a buy, or if I want to be more patient, I wait for it to close and second candle again. Isn't it? That's the usual thing that I do. So let's see how wide is this. So it's only a 3.2 pips of gap, meaning that if you want to buy here to go up, your stop loss is only 3.2 pips on the line. All right, you can put it much lower and or even put it here. It's really up to you. Okay, that's up to your personality and your risk profile. Okay, so that is done. The P wave that I talked about, let's draw here to here. Okay, it hasn't closed above. I'm going to leave this one here, and then the next one will be here to here. If I draw it here, doesn't make sense here. And do it here, early entry. Okay, I put it here. Okay, trend line is subjective. All right, some people draw from the body to the body to the body. All right, I drew it from the wick to the wick. Okay, I treat this as a outliner. Okay, went out and closed, so I just leave it there. Can I put a point through here? Yes, definitely I can. Okay, but if I put a point through there, meaning that I will have a wider P wave. Okay, if I'm selling, then my reaction will only be much lower, isn't it? As compared to much lower here, as compared to if I have a narrower P wave here, whereby I would have really start selling around here. Okay, so like what I said again, is subjective. So there's no right or wrong. Okay, as long as you make money, it's the right one, isn't it? Okay, so we have zone the lines here. We have these all done. Okay, what is the fib? Did I remove the fib earlier on? Oh, this is the short-term one. That's for yesterday. Okay. Now, there is another fib which I drew, which is from the yesterday, the bullish leg of yesterday, which is came back. All right, and then it almost touched 78.6, and then it comes back here. So basically what we are looking at is a lower high here, and there's a potential that's going to break, and then hopefully it goes above here to target these two again. Okay, this is on the 1 hour time frame on this leg. Okay, it's different from the one that I showed in the beginning of the video, which is on the daily time frame, isn't it? The daily time frame one is, let me just hide away the rays. The daily time frame was this low high, right? Yep. So the daily time frame was the one that I was talking about earlier on. Yep. And then when I go to the 1 hour, I have the little zoom in of this leg. Yeah. Bounce up. Hopefully to go to here. So again, depending on what time frame you are trading. Okay, let's go to 1 hour. Yeah. Okay. So on the daily time frame, if it can drop all the way back here, that would be a very good price to buy, okay, to go further up. If it doesn't and it keep going up, so be it, right? Just keep on buying to go up, right? So that's 2 fibs we have there. All right, let's remove the fib. Let's put this away into my buy and sell here. All right, let's hide it. Hide the fib. Hide the day. Right. Yes. Where is my higher time frame lines, which is here? Okay, let's go to the weekly. Right. Okay. So now we are back at the higher time frame of weekly GBPUSD. I have 2 trend lines here, inner and outer. With the news of the CPI and US interest rates, hopefully I can see this particular candle. Let me just zoom in. Okay, hopefully I can see this candle close above this trend line. Okay, as I said in my previous video, price might just go and then hopefully whack second outer trend line. Yep, that's the longer time frame that we are looking at. Go back to the 1 hour. Is there anything else I want to tell you? Oh yes, event. Because FOMC, I always have a habit of putting in the previous FOMC, the highest the price went to and the lowest. Okay, does it help in my trading? Yes. Okay. This was the previous FOMC, so the highest was, what time is this? 00. That was before the FOMC, so the highest was here. Right, which one is the highest? This is 269.88, 69.87. Okay, so the previous FOMC, the highest is here. So now I am going to put in the let me clone this one. The top one is usually the latest one. So with the new FOMC, the lowest is here. I rename it as FOMC 8. Okay, so this is no longer ongoing. This is post FOMC top. This is no more ongoing, right? So I have this 8, clone it. The top, since the post is here, this is top. Right, and rename here. Rename as 8. Rename this as 8. Hide these 2. Okay, so what I'm telling myself as the days goes by, this bottom will be adjusted when price goes down. Yeah, but currently the bottom after the FOMC news of yesterday is this, right? So the high after the FOMC news of yesterday one is here. So if price goes up accordingly, I'll shift it accordingly. This gives me an idea that, say if price were to go up here, right, and the low was here, so it give me how should I put it, a kind of invisible stop lines, I will put it, yeah, stop loss locations or something like that. Yeah, hope you understand what I mean. So I'm going to put this back to here. Right, then the event was here. Okay, so FOMC 7 opening post, okay, opening was at this level, right? So yesterday was post 8 opening. This is locked. Where is my event? Let me unlock it. Shift it. Let's go to higher time frame because it's quite a distance. There we go. Let's put it here. Go back to 1 hour. Okay. So what I'm doing is, yesterday was the FOMC. The beats only at these hours. So today, which is a new day, Thursday, I put it as a post FOMC opening. Now this is the number 8 of FOMC since I started recording. So I'm just going to put as 8 opening. So where's the opening? So opening is here, it went down. Okay, so this gives me an idea that the price is now below after the Powell speech, after the announcement of the US interest rate close the day. Okay, I don't put it on the actual day itself. No, I put it on the next day. That's why I put the word post. Right, post 1 day, past 1 day. Right, so this is another way for me to see the low and the high of how the price move with regards to the rise in the interest rates. Yep, so that's another way to look at the chart based on the fundamental data of this. Yep, all right. And I usually put it under event. Right, so let me just put this as, yeah, better rename this as 8. There you go. Everything looks nice, and leave it there. All right, so let's get back the range box. let's get back the buy and sell. There we have it here. Let me push it down. Yep, let me have a quick look at all the weekly buy and sell. Okay, so this is the weekly buy. Price has gone up a bit above it. I had the daily buy. Let me just drag the thing across. Let me hide the lines. Let me hide the FOMC and bottom. There we go. Okay, so if I were to draw this, expand this one, okay, this is locked again. I hope you're following me and get the gist of the idea of what I'm doing. Okay, I mean, this is as how should I put it, as normal as I would do it on a daily basis, looking around my chart. There you go. This is the buy. It has gone past my previous buy. It's far away from the sell. All right, this is the bigger time frame of buy. Right, so the idea is still the same. Okay, instead of the 1 hour buy and sell, I have the daily buy and the daily sell. So like what I say, a close above the Monday high would be good, right? However, as I also said, because the terminal interest rate for the US for 2023 is still 0.35% away, meaning there's a potential of them to hike another 0.35%. Not at one go. They could go to they could hike 0.1% in July, 0.1% in September, so on and so forth. Right. So meaning that the price either come back down on a 50% to go up based on a FIB, or comes back all the way down to test the high of this weekly buy zone, which is all this pink color. All right, come down, take a test here, and then shoot back up again. All right, so if it comes down, I'll buy, because it's cheap, isn't it? You want to buy cheap and sell high. If it's keep going up and if it's close above here, remember our theory of first candle, and let's see what happens to the second candle. Right, second candle, if it closes up here, that's good. If it closes back down, then just be patient and wait. Right, hope it's not too confusing for you. Okay, just, well, play back this video and you would understand it slowly but surely. Right, going back here again. All right, our two lines here in the lower time frame. That's the FIB in that, and here we go. Okay, so I think that's enough for today. Just remember there is the Europe interest rates, which might cause some movement, and then followed by the JPY interest rate tomorrow. Right, and thank you, and hopefully I see you again tomorrow. Thank you. Goodbye.